You're gonna learn perfect EMA settings and then a very accurate trading strategy that makes consistent profit. Just make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, we need to add 5 exponential moving averages with some special settings and combination. Here we click on indicators and we search ribbon, this one. Moving average ribbon. This indicator gives you 4 moving averages, and then later I will add another EMA. We need to change the settings of these moving averages. So here we go to the settings of the ribbon, and first we change the type of moving averages to EMA because, as I said, we need exponential moving averages. Then here for the first EMA, we set the length at 5. For the second EMA, we also set the length at 5. And for the first EMA here, for the source of calculation, we set it to high. And for the second EMA, it should be based on low. So here we have 2 EMAs with the same length of 5, one based on high and the other based on low. Alright, for the third EMA, we set the length at 100. And for this EMA, we also set the length at 100. For the third EMA, here for the source of calculation, we set it based on high, and for this one, it should be based on low. We need to change their colors for better tracking them on the price chart. For the EMAs with length of 5, we set the color to white. And for the EMAs with length of 100, we set the color to green. And finally, we go to the style tab and we increase the thickness of the moving average lines so they will be better visible on the price chart. Alright, we're done with the settings of these 4 exponential moving averages, and now we need to add another EMA. So here again, we click on indicators and we search EMA. We add this one, moving average exponential, and for this one we also need to change its settings. So here we go to the settings of this EMA, and first here in the inputs tab, here for the length we set it at 200, and then here in the style tab we change the color to orange, and we also increase the thickness of the line so we can better see it on the price chart. Alright, we're also done with the settings of this EMA, and now let me teach you how you can find accurate buy or sell signals based on these exponential moving averages with the settings that we made. But before that, I'm proud to announce that I have published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, let's see how we trade based on these EMAs. First of all, this is a reversal trading strategy, which means that we are trying to catch the starting of a new trend, and these EMAs with the settings that we made will help us to find the reversal points of the market. This orange line here is an EMA with length of 200, and we're going to use it for trend identification. These 2 green lines here are EMA with length of 100 based on high and low, and we're going to use it for identifying pullbacks. From now we call it green channel, and these 2 white lines here are EMA with length of 5 based on high and low, and we're going to use them for identifying end of the pullbacks and buy sell signals. From now we call it white channel. Alright, now let me explain how we trade based on these EMAs. In the first step, we want crossing of the price above or below this orange line. So at first, our focus is on the orange line. For example, here you can see that the price from above the orange line went below the orange line. As I mentioned earlier, we use the orange line for trend identification. When the price is above the orange line, we consider the market as trending up, and when the price is below the orange line, we consider that the market is trending down. So the crossing of the price above or below the orange line can be a signal for starting of a new trend. For example, here you can see that the price crossed below the orange line, so this is a signal that probably a downtrend is gonna start. But we don't trade only based on this. Still too risky to enter a trade based on this signal, and we need more confirmation to have higher probability that a downtrend is really happening. In the next step, we want the white channel to completely go below the orange line. For example, at this point from here, when these candles are closed, you can see that the white channel is completely below the orange line. In the next step, our focus is again on the price action, on the candles I mean. We want pullback of the price to the green channel. So now our focus is on the green channel and we want at least touching of the price in the green channel. So until now, after having the price below the orange line and also having the white channel completely below the orange line, now we have pullback of the price to the green channel. In the next step, we want to know when this pullback is ended so we can enter a trade. For this purpose, our focus would be on the price action, the candles, and the white channel. We wait for a candle that is closed below the white channel. When this happened, it shows that probably the pullback ended and there is a possibility for further decline of the price. So here the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the green channel and profit target at risk to reward ratio of 2. This was a short position setup where we identified starting of a new downtrend, and now let me teach you a long position setup, which is where we identify starting of an uptrend. Alright, here we want crossing of the price above the orange line. This is a signal that probably an uptrend is forming. But as I said, we never trade only based on this, and we need more confirmation that a reversal is really happening in the market. In the next step, we want crossing of the white channel also above the orange line. You can see that from here, when these candles are closed, the white channel is completely above the orange line. Now in the next step, we want pullback of the price to the green channel. We want at least touching of the green channel by the price. You can see that it didn't happen here. So this is not the pullback that we want. In practice, this could be a pullback and after that, advancing of the price. But we stick to the rules of this trading strategy to decrease our risk as much as possible. So in this trading strategy, we want a deeper pullback where the price at least touches the green channel, like what happened here. So now we can go to the next step and wait for a signal that shows end of the pullback. In a long position setup, we wait for a candle that is closed above the white channel. When this happened, it shows end of the pullback and further advancing of the price is probable to happen. So here the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the green channel and profit target at risk to reward ratio of 2. And you can see that this trade was also a profitable trade where the price advanced up to this point. Let me show a few more examples so you completely understand this trading strategy. Alright, here you can see that the price went below the orange line, and after that the white channel is also completely below the orange line. Now we wait for a pullback of the price to the green channel. You can see that it happened here. And after that, you can see that this candle is closed below the white channel, and this shows end of the pullback. So the sell signal here is confirmed, and in practice we could enter a short position at this point with the stop loss above the green channel and profit target at risk to reward ratio of 2. Alright, moving on the chart, you can see that here the price went above the orange line, and after that the white channel is also completely above the orange line. And in the next step, we wait for the pullback of the price to the green channel. You can see that it happened here, and at this point you can see that we got a candle that is closed above the white channel. So the buy signal here is confirmed, and in practice we could enter a long position at this point with the stop loss below the green channel and profit target at risk to reward ratio of 2. And this trade is also a profitable trade. You can see that the price advanced up to this point. Alright, following this uptrend, we're trying to catch a downside reversal of the price. Here you can see that the price went below the orange line, and after that the white channel also below the orange line, and here you can see that we got pullback of the price to the green channel, and after that at this point we got a candle that is closed below the white channel. So the sell signal here is confirmed, and we could enter a short position at this point with the stop loss above the green channel and profit target at risk to reward ratio of 2. And this is also a profitable trade. As you can see, following the downtrend, here you can see that we got got crossing of the price above the orange line, and after that you can see that the white channel is also completely above the orange line, and here we got pullback of the price to the green channel, and now we want to wait for a signal that shows end of the pullback. Here you can see that we got a candle that is closed above the white channel, and this shows that probably the pullback ended and the price is gonna advance more. So here the buy signal is confirmed, and we could enter a long position at this point with the stop loss below the green channel and profit target at risk to reward ratio of 2. Please pay attention that this trading strategy will not give you guaranteed signals. There is no trading strategy with 100% win rate. This is not possible, and you need to manage your risk properly so you can minimize the effect of your losing positions. 1% role risk management is the best risk management strategy that is recommended by professional traders. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it now, because without a proper risk management you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.